Hello, this is Dave, and welcome to Equities Story. I'm here with the most incredible Mr. Wolfie, and this is just general share advice and not personal advice. So, welcome everybody. Welcome, Wolfie.
hmm
Wolfie, again, pretty quiet, but there's a bit of a sell-off today on the markets. You could see some of the tech stocks last night in America were particularly weak,
hmm
and so yeah, so I think that's far from really happening at the moment, Wolfie, isn't it? Those tech stocks.
No, but they had a pretty strong run over the last couple of weeks, so it's they needed an excuse to have a bit of a sell-off, or at least a profit taking after a big sell-off earlier. And the reason that they basically got sold off was the bonds issue as well, and of course the stronger rhetoric from the Fed in America, where they're going to be pushing those interest rates much higher, much quicker, I reckon. So we've got that's been spurring the actual markets at the moment, and no surprise that has a little bit of a cool down.
Well, no surprise, it's still negative on the charts as well, really, I suppose.
Mm.
Um, Wolfie, coal was up overnight, and the reason being,
We've talked discussions Europe banning coal from Russia. So if that happens, I'd say more turmoil, more volatility. Hello, coal. Hello,
yeah,
coal players, NHCs, CRNs, and WHCs.
just have a look at them. Unbelievable, right?
Mm.
So
Mm.
most of them up and doing quite well today in a pretty difficult market.
And you
Uh,
know what, Dave? That with what I'm seeing, the rhetoric from both sides looks like it's going to be a drawn-out affair. I don't think anyone's going to back down here. Accusations flying left, right, and center with war crimes. The Russians obviously digging in, saying it's all fake. Of course, it is. Russians never done anything wrong. So it's just going to be a long drawn-out affair, I think, because Russia really wants that corridor all the way towards Mariupol.
Yeah, no, Wolf. It's really unfortunate, isn't it? And it looks like this war's just going to go on for a long time, and there's going to be more tariffs, more embargoes, more inflation, more problems around the world. It's certainly not looking very good when you look at that. If you look down the road, is it?
No, that's why we're still concentrating on the commodity stocks. We're looking at inflation stocks which we talked about last week. So we've got the pretty much thesis is covered, Dave. From that point of view, how long they're going to last, no one, of course, ever knows. But we're going to be following the trends, which we're doing right now.
So there was another interesting development which someone brought to our attention last night. Well,
Yep.
we'd been wary of it, but obviously it's having a good move up this week, and that's the Aussie dollar.
Mm-hmm. And,
So
and Dave, when you think about why is it going up, and of course, commodity prices are probably the number one driver here, which means that our position globally, economically wise, is much better than everything else, which is driving this Aussie dollar up, which also means possibly that inflation is not going to be as bad, because when you've got much bigger spending power, Dave, you can buy things cheaper overseas, which hopefully will help us with inflation here in Australia, which possibly means that we're not going to be as bad as US or Europe inflation wise.
yeah, no, definitely we're on the way up, but we're sort of still. I mean, you could argue we're still sort of trading at the moment around the mean average, aren't we? For the
Yeah,
last,
yeah.
I mean, listen, it's a buffer. I know what you're saying, but I mean, I wouldn't get too excited till we get over. I don't think it's going to make a huge difference until we get over sort of 80, is it?
Look, and the thing is, it's all, like I said, I think it's predominantly driven by the strong commodity prices, right? So it probably depends on how long this is going to last for. Right now, it's looking pretty good. So we're going to look at some stories there. We're going to look at some themes that are going to be benefiting out of this higher Aussie dollar.
All right, far away, Wolf, and we went
Mhm.
through a number this morning, and the first one on the list is West Farmers. Now, technically, short term, obviously, we're not interested. This is in the 21 favorite stories that you like on our market, and we're happy to buy this and nibble away here on this monthly chart. So, a nibble between around sort of, so if you can get it sort of 48.50 or even closer to 48, absolutely perfect. But West Farmers, for you, Wolf, is certainly in nibble territory, isn't it?
It is for the long termers, right? And and with the theme here, we talked about the importers are going to be the beneficiaries out of this higher Aussie dollar, and obviously Bunnings is going to be the big one, and this is the driver for Wesfarmers to some extent, of course, Kmart and Target as well. So yeah, I mean, obviously looking at Wesfarmers as a pretty good play, but there's some other stories in there as well in this space, the retail space, which we'll look for in a second, Dave. But yeah, I'm liking for the long term Wesfarmers nibble, but you've got to have that long term outlook.
Well, I've got JB Hi-Fi again, which is a dividend stock. And forgive me, Wolf, I'm going to leave this on a monthly chart as well. I think there'll be a lot of support around 50. Again, I think there's a few. Macquarie, I believe, has got a higher target price on this company. It's a definite hold, isn't it? Definitely a good dividend play.
It should be a huge beneficiary out of this higher Aussie dollar, because pretty much all the electronic goods they import are from overseas, probably China, Japan, and all the other Asian countries, right? Like Korea. So, I'm thinking that this is the one that you want to hold on to because it pays a great dividend, and in a short, at least space of time, it should do very well.
I'm just going to go back to weekly chart. ALD, Wolf. Again, not a bad looking chart. Still a lot of selling pressure around that 32. But Ampol obviously should do reasonably well with a stronger dollar.
Yeah, because they are importers, fuel and so on. So we're going to talk about another one of those. Hopefully they'll get that much cheaper with higher Australian dollar. So that should help them in a way. They're refiners here in Australia, of course, petrol stations as well. Overall, higher oil prices anyway will probably help them along with margins. So I'm thinking this is looking pretty good too.
Coles, Wolf, as well. Again, a good dividend play, which hopefully should be well supported in this environment. A bit of a defensive as well.
Absolutely. So probably Metcash and Coles are the number ones in the actual food space. So for me, and they probably import a lot of their food from overseas. I know they've got some, of course, Australian-made goods, but a lot of it has been imported. So that should at least help to mitigate some of these cost pressures. So absolutely the right play for higher Aussie dollar.
You've got Qantas on this list, Wolf. Obviously, maybe making their fuel a little bit more affordable.
Oh, Dave, this is the biggest cost for the airlines industry is the actual fuel, right? So if they can get the fuel cheaper with a stronger Aussie dollar, it's going to help them enormously. I remember these margins are not, this is a not high margin type businesses. So anything positive for them, for Qantas, it should reflect well. So for me, it's actually probably the leisure space / travel space that should do quite well.
Okay, let's have a look at two of those stories, because I know you like SDR, SiteMind, and it's had a little bit of a jump this week, but I still don't like the chart. Well, for me, it's got to do a little bit more. But what you're saying is quite sensible. Just get on the watch list.
Absolutely. We always, we always want to run watch lists because we want to keep tabs on stuff that we like. And when it pokes us a little head up, like you love to say, Dave, we want to be on top of them, right? We don't want to fumble around and go, I remember I had a stock 2 months ago in the right space, but I can't remember what it was. Well, that's what watch lists are for. So you can actually follow these things, and as soon as it hits some sort of a target of yours, we're onto it.
And I suppose corporate travel would be in that not a bad looking chart. I think it needs to get over $25, Wolf, for me to think this is going to have a run, but it doesn't look too bad, does it?
Yeah. So when you think about higher Aussie dollar, so there's two train of thoughts here, right? With a lower Australian dollar, there's probably going to be people who want to come to Australia because it's cheaper to come to Australia with Aussie dollar. But on the flip side, if you've got a strong Australian dollar, then people want to go on holidays, right, here in Australia. So it's sort of, for me, a positive where, I've got much more money to spend, so I'm going to go on a holiday. I'm happy to have a look at stuff in the leisure space, and CTD sort of fits the space. The chart's pretty good, so I'm a positive on this.
AP, Eagers, actually just, I wouldn't be buying this on the charts, and I wouldn't be but it's looking better, Wolf. It's bounced back over trend. Again, another beneficiary.
Yeah, absolutely. I mean, the car industry should be absolutely. You know, the cars, low margin businesses. If you can save a penny here and there, higher Aussie dollar will definitely help purchasing cars cheaper. So why not? APE is the premier premier stock in this space. So you'd be looking at that 100%.
On that list, you got MTO.
Mm-hmm. Same thing, you know, this instead of cars, bikes. So you'd be looking at that. You know, just got to wait for the right, maybe some of these charts to slightly just, you know, give you a bit more out of it, but watch listed.
Well, and I think this is a dividend play as well, isn't it?
Exactly.
I think the banks are put in NAB, maybe one of the better looking charts in the banks at the moment, Wolf.
Yeah, and look, banks are fairly controversial, and you can maybe make a case for a lot of different things. There's a lot of moving parts to banks, but when you think about it, it's all probably about the funding. If the funding depends, obviously, how the funding is structured, but if your funding is in US denominated dollars, and you earn your, of course, you know, majority of your business maybe here in Australia, maybe you've got much cheaper interest rates to pay with a stronger conversion rate. So possibly there's some merit in looking at banks in a high Australian dollar.
And you've got SUL, which again, if we put this on a monthly chart, we've argued this is maybe a time to get it's a pretty strong dividend, isn't it? About 10 or 11%.
Yeah, absolutely. So again, an importer of a lot of goods from overseas. You know, it's got a fairly varied businesses as well with BCF and I think Autosport. So what was it? The auto, Super Cheap Auto. Sorry. So there's a few things in there to have a look at.
Well, we got SNL, so I'm just going to move it back to weekly. And that weekly is starting to look very good, looking like it could have a little bit of a jump higher. Mm-hmm. Lots to like about this chart, Wolfie, I must say.
Yeah, look, this is probably the standout chart, and a business that again will probably benefit out of this higher Aussie dollar because it's parts for buses and trucks. Very niche business. They haven't put a foot wrong really, and look at the performance of the last 2 years. It's unbelievable, isn't it? So at the end of the day, another story that possibly you should be looking at.
Yeah, look, if this could look like this by Friday, you'd be definitely be buying it.
Licking your lips.
Licking your lips, and of course Babcock as well.
Yeah, there's actually two, Dave. I forgot to give you another one. So Babcock and ARB are the two, probably the other ones that are in the car parts businesses or accessories business for the big auto industry. So for me, you know, maybe it's too early, but you should have them on your watch list to see it, especially when ARB's a market darling, right? Market darling was just too expensive, came back. We're just waiting for another opportunity to get into this.
It's funny, Wolf, the charts look very similar recently, don't they? Yeah. It does come down. So thank you very much for that, Wolf. There's a number of ideas there. I think the only ones for me that I would look at buying are Wesfarmers, JBH, ALD, SUL, or Coles. Mm-hmm. They all look pretty good. If people want to have a little bit of a nibble at any of these, I think fine for long-term investors. None of the rest are there yet, Wolf. I mean, maybe NAB, but I'm not. You know, it's had a bit of a run. Mm-hmm. But I think definitely, Wolf, you've got five stocks there, which are certainly interesting to have a look at.
And now, as at the end of the week, maybe, yeah.
Oh yeah, definitely. Yeah, it's just lightly traded. It's the only thing you've got to be careful with SNL. I mean, it moves up and down with 4 or 5 grand. So you know, you got to be a little bit careful. Okay. Wolf, we had some stocks that we follow that put out reports today. ALC, it's just not there to buy at the moment. But again, another win.
Yeah, look, another little contract. It all adds up, right? So for me, it's looking pretty good.
We've got AVL. Mm-hmm. I think we had a few questions. I did suggest if this went to 0.89 to sell, and so it is that 0.89. So I think I'd be selling it. Did the report give you any?
It's interesting, isn't it? It's interesting because we've had a lot of comments from our members saying vanadium is the next big thing. Everyone's get excited. You see a chart going up vertically pretty much. FOMO's kicked in. Everyone's high-fiving themselves, going to the moon. But, you know, it looks like one of those buy the rumor, sell the fact type stuff. So they released the feasibility study today. which wasn't too bad. I mean, I'm not going to destroy it, but obviously they've taken the opportunity to do it while the vanadium price started to go up in an environment that's actually positive for them. So, if you go back 12 months, Dave, this project would probably never get off the ground because it would have been much lower pricing. So look, it's interesting, isn't it? Where companies are taking opportunity to really update their projects and really sell it back to investors saying this is a great project. Look, it could be, as long as that price holds up at those elevated levels, and that's the key here. Are they gonna be there like that in, say, 2 or 3 years' time when there's actually mine starts getting up and going? And the funding is also a key issue. I think they're talking about half a $1 billion to actually get this going as well. I had a look at some of the numbers in the vanadium industry. It's not a huge industry. It's a small industry. It's a niche industry. I think the key really right now is the electric vehicle market, or the energy market, maybe with the batteries, and the vanadium is starting to be used in battery storage technology. So potentially, maybe there's markets growing for sure. But is it justifiable to see those sort of prices go from 0.03 cents to 10 cents in a space of 3 weeks? I don't think so. I think there's a lot of FOMO in there. So just be careful. Vanadium is, like I said, it's a very opaque, really smaller type metal. It is used, of course, yes, but to find more information about it is scarce. It's not around. And the biggest producers, Dave, but maybe this is why it's also running. The biggest producers are China, I think about 60%. Russia is second with about 17%, and South Africa is third. So it's another metal to probably add to our list of Russian metals that maybe it's going for a run.
All right. Wolf, PNV.
Yes.
Polynoval. Some starting to hit some decent revenue numbers, but the charts say still way too soon.
Yeah, I think so, but it's starting to look much more attractive than it was, say, 12 months, 24 months ago. I remember I was trading at about $2 billion, right, at $4. So now it's 700 million. So it's still not cheap, but at least the revenues are starting to catch up, Dave. So they are on track. They're talking about annualized revenue on about 48 mil. 700 million market cap, 48 mil. That puts on around, 13 times revenues, 14 times revenues, which is not bad, Dave. Probably another quarter or two, maybe another 6 months. And you started going, oh, hang on a second, over 50 million, 60, 70 million in revenues. And then you've got a nice business and you think to yourself, maybe it's not that expensive anymore. So definitely one for the watch list. And if it starts trending, I'm on. This is a fast growing business.
Yeah, definitely. And yeah, the only problem is, Wolf, we just got to wait. I mean,
yep.
If we get a world recession, all the revenue of every company will be down, I suppose.
Yeah, well, the other things that's been marked down is because it's still loss making big time. So it's one of those, we need to see a much better chart before we actually start getting interested.
And again, good price action today, Wolfie. Is this fundamentally interesting for you? I don't think so, because they're not making any money yet, are they?
Well, yeah, that part of it, unfortunately, is a fail at this stage, of course. But a very interesting story. So when you look at the fundamentals of the actual technology and stuff, yeah, you have to get excited about it. But I'm not going to get excited until I see revenues coming through and commercialization. So still a trading stock. This announcement today was another, I suppose, progress report, successful progress report. So, there's a positive reaction to that, but I think that's probably going to be short-lived. I just, unless there was really substantial announcement with maybe commercialization and money coming through and so on, you'll probably see a bit of a bounce and maybe come back to the trend lines again.
Wolf, I think you've hit the nail on the head here, champion. I think this will be down back on the trend by the end of the week. So not trending yet. No. Wolf, really, there's a few stocks looking okay-ish, but today it's all about coal.
Yeah, absolutely. Coal looks absolutely magnificent, doesn't it?
On that note, Wolf, was there anything else you wanted to add?
No, I think we pretty much covered a lot of things today. So hopefully we'll see how we go today. I think it's a bit of a profit taking today on our markets, which is okay. Don't panic middle of the week. Let's wait into the week, see where our stocks are at.
on that note, thank you very much, Wolfie, and look forward to doing this tomorrow. Thank you, Wolfie.
Right.
Bye-bye. Bye.